All right, thank you very much for this opportunity indeed. Esteemed panelists, dear Chairman Michelle, and the participants who've joined from all over the world. Um, Let me just use a quick minute to give you some context on who we are. So perhaps the rest of the presentation would make greater sense. RSGT is a port operator of Saudi origin. We are a relatively young port operator with our first concession to build and operate a new terminal, which we called Red Sea Gateway Terminal within Jeddah Islamic Port only 11 years ago. RSGT is majority owned by a large and diverse Saudi-based conglomerate called Zenel. Zenel's main businesses include hydrocarbons and infrastructure, out of which our main focus is ports, water, and power. We are present in 30 countries across the world with 13,000 colleagues and 40 publicly owned and privately owned companies. RSGT is owned by a group company called Cisco, which is listed on the Saudi exchange. And we are fortunate to have as our partners the MMC Group of Malaysia, which is the largest port operator in Malaysia and the 8th largest in the world. RSGT is now handling approximately 2 million TEU a year in Jeddah alone. And with our recent concession to take over another terminal within Jeddah Islamic Port, we will virtually double our capacity, or we have doubled our capacity because we took over the new terminal on the 1st of April this year amidst all of these challenges. So we're quite proud of that. And we've taken our capacity to just over 5 million TEU at the moment. I'll tell you a bit more about that in one of my later slides. So today we've just put together a few messages based on what we see around us as interested port investors in key markets globally, but also how we expect the current situation in the market will shape things to come. So again, this is a busy slide, but what basically what we are seeing around us and what we expect will happen is the current market environment. And there's no doubt there's quite some uncertainty around what's going to happen in the near future, whether it's going to be this shape recovery or that, etc. But we can all agree that there's a downturn coming and it's probably going to be quite severe. And which would no doubt, as Nishal mentioned earlier, it is a relatively tough business, and it will no doubt stress a number of port and terminal operators financially. It would also stress some of the countries fiscally and financially. There are many countries in the world who have successfully partnered with the private sector in developing and operating their ports, but there are a number of other countries who've chosen to manage it themselves. And given, depending on the financial position of the countries, then they would find it difficult potentially to invest further in infrastructure themselves going forward without partnerships with the private sector. So indeed, that means that new opportunities in some of these countries might come up for port operators. Over time, we have seen that port investments have also been carried out by non-core operators such as shipping lines or financial firms such as private equity houses, etc. And they might also feel that they would like to separate this non-core part of the business and potentially divest it, again, meaning new opportunities for active port investors such as ourselves. And I'll go into a little more detail about this. If you look at the left side of this slide, it basically tells you that collectively gives you the message that multiples at which some of these listed port companies are trading at are going down over time. This is just in the last 6 months or so itself, and we've seen some dramatic movements downwards. Again, we all know the reason for it. It doesn't mean there's anything wrong with these companies, but these are the times. And this then in general would mean that companies would become in general more affordable to do transactions around. And again, just going through some of these points to help you through them. The last 10 years where we've had a sustained market rise, let's call it a bull run, the longest bull run that the market has ever seen since the financial crisis, has also meant that the concession prices or asset prices in the port sector globally were pushed at record levels. Some of the concessions began to be signed at 50% plus revenue shares, which were not really heard of in the period earlier. And some of the transactions started to happen at multiples that were also quite aggressive. So this obviously meant that significant port capacity was created especially in some regions more than others, perhaps, which led to splitting of the volume, which led to lower utilization and profitability for some of these port operators who got into transactions of various kinds. And as financial cycles don't last forever, some of these assets that were bought into expensively, they would find it very stressing to have volume drops happening around them, which would obviously stress their balance sheets. And if the downturn continues in a long-term fashion, then they potentially might get stressed enough and be forced to bring some of their assets to the market, which potentially may spark a new level of M&A activity in the coming period. These are probably early days. Volumes across the board have probably dropped more in the 10 to 20% range, which is lesser than what some of the expectations earlier were. But no doubt, this would stress some companies more than others. And companies with strong positions, who are resourceful and have the willingness to invest, might then find it more affordable to enter some of these new assets and grow inorganically. Again, a busy slide, and you can have these slides from transport events later, so you don't need to worry about reading all of it. But if you see the red box that we have created there, it just goes on to share this, to suggest that in the last period, transactions were done at extremely aggressive multiples, and hopefully we would see more affordability in the M&A space in the coming period. As all of this unfolds around us, RSGT remains committed to what it signed up to, which is, and those pictures that you see are of Jeddah Islamic Port. RSGT started as the third and the newest terminal in Jeddah Islamic Port back in 2009-10. But in December of 2019, we signed up to take over what was called the North Container Terminal within Jeddah Islamic Port, virtually doubling our capacity. And those three pictures give you a flavor for our expansion plans over the next period, including in the long term. So you can see from RSGT's total berth length or quay length of 1,350 meters originally, we have gone up to 3,300 meters by taking over the North Container Terminal, and we shall continue investing in this overall port infrastructure in the port, taking our current capacity from 5 million TEU to eventually a little over 8.5 million TEU. And those are some of the equipment projections in the longer term as well. Just generally suggesting to you that we remain committed to this particular market in Saudi Arabia as our home territory, but also our belief in the wider Red Sea region. While we continue to expand in the Saudi market, we also have an ambition to expand, hopefully sensibly and sustainably in markets abroad to be able to diversify, but also carry over our significant learning from operating in Saudi to assets and port operations worldwide. That those pins there at the moment are randomly put. So it's not that we are looking at those particular markets in particular, but just to give you a flavor for where our focus is, we recognize that we are the first and the only true blue Saudi operator, and we are very proud to carry the name out to international markets. Wherever possible, we will hope to invest in opportunities internationally that are able to generate value mutually between our home base and the international location. We are at the moment looking at a number of single terminal assets in our investment strategy and project pipeline, but we'll also be open to acquiring small portfolios where they fit our strategy. Indeed, Red Sea is a core market for us, a market that we truly understand and believe in, and we are also spending quite a bit of time looking at opportunities in countries around the Red Sea area, whether they are on the Middle East side of the Red Sea or on the East African side of the Red Sea. Where we are spending our time most is to look at operational or brownfield assets where we truly are able to unlock some inefficiencies. We are more focused on gateway opportunities, even if it comes with some transshipment, but not purely transshipment opportunities. Saudi Arabia has excellent political, economic, and cultural homogeneity with a number of countries around the world, and as you would imagine, it only makes sense for us to make some of those markets our primary markets. So as you might have read, for instance, in the news, we spend quite a bit of time in Bangladesh. We find it to be a very, very interesting market with the right fundamentals and a market which is ready for deep water port capacity, and similar other markets with political and diplomatic alignment with Saudi Arabia. So that does, our working closely with the Saudi government on many fronts does help us in that front. We are a long-term investor, and overall, as a combination of all of this over the next few years, we hope to have built a small portfolio of terminals that work well for our customers, our shareholders, and for each other. With that, I would just close, but feel free to write to me questions, and that's my email address just in case you think of something later. Thank you very much.